Hello investors and traders. Today I'll speak about 3 dividend stocks that pay you dividend every month. So let's start with the first one. Today it's Realty Income Corporation. It's a REIT, a real estate investment trust. So we can check here that every month stable this company pays you a dividend. We see here it December, January, February, March. So really every month you receive a dividend from this company. By the way, the dividend yield is more than 4%, so it's quite nice. So let's check it, the chart of this company. So January after the pandemic lows, here it was February 2020. So we are trading in an increasing channel. And by the way, now we are here in the lower border of this channel, so I think there is still a nice possibility, a nice potential to see grow in this stock, in this company. Most probably we will see levels about 80. So in this case the potential from the current level is about 25% for the stock to see increasement. Let's have a look on the fundamental parameters for this company. So we see the total score is 84, so it's quite nice and quite safe score for the beginning. Then the financial stability, we can see that the company has debt, so debt to EBITDA ratio is more than 6, interest coverage about 2.6. It's not so strong parameters, but anyway, for it, their model that they are usually has a debt on their balance sheet. By the way, this company Realty incomes roughly 11,000 properties, most of which are freestanding, single tenant, triple net leased retail properties. Its properties are located in 49 states and Puerto Rico, and are leased to 250 tenants from 47 industries. Recent acquisitions have added industrial, office, manufacturing and distribution properties, which make up roughly 17% of its revenue. So looks very nice. The marginality very nice, very high figures. Operating margin about 40 and net margin 20. So very high marginality company. And here we can see the expectations for EPS, earning per share, about to see grow in the future years about 8%, and the revenue also about 8%. So the analysts expecting this company to see grow in its indicators. And by the way, the valuation, I can tell you that usually the rates are using such value rank like price to FFO. FFO is fund from operations, so usually rates are valued by this indicator. So for this rate we have 18. We have a few rates today, so of course we will compare them together. So here what we see, the revenue is expected to grow, the EBITDA also will grow, and the EPS also will have a nice growth. By the way, here the dividend per share also expected to grow in the future years. It's for us it's very important because of course we are dividend investors. So this line, dividend per share, of course we would like to see grow in these dividends. And of course here the dividend yield is 4.4%, and the dividend growth rate is more than 2%. The second stock for today that pays monthly dividend, it's STAG Industrial with the ticker STAG. It's also a REIT, real estate investment trust, operates in the sector of finance, and its dividend yield is more than 4%. Here we can check that really it pays dividend every single month. It's very important for us. And let's have a look on the chart. So here in my mind let's check it. By the way, we are traded now in the levels that the pre-pandemic levels. So here, what I see, it's most probably it's impulse, decreasing impulse. So it was the first and the second, the third. Third is usually the longest wave in the impulse, the fourth and the fifth. So here it's finished, the correction finished. So now I'm expecting to see this this stock to grow from this level. By the way, if we'll look carefully, we can see such figures like head and shoulders. It's the headline, the left shoulder, the right shoulder. So usually it's a single for short. So of course, yeah, after we broke this neckline, of course it was a nice target to short. So usually in a trading it looks like this. So here you short, and the potential was very nice. It was about 20% if you are a trader. But here today the video about investing, about stock investing, so I don't think it's the matter. But anyway, here it was a good opportunity for short. So let's have a look on the fundamental parameters. So for STAG, total score is 76, also a nice figure. The debt to EBITDA ratio is 4, interest coverage 3. By the way, it's better than the first one, the Realty income, and the marginality also very high. I see all the rates are highly marginal companies. STAG Industrial is a real estate investment trust primarily involved in the acquisition and operation of single-tenant industrial properties throughout the US. The vast majority of the company's real estate portfolio is comprised of warehouse and distribution buildings. Most of these facilities are located in the Midwest and Eastern US state. Second, Russell derives nearly all of the income in the form of rental income from its portfolio of warehouse and distribution properties. So expectations for growth, EPS earnings per share 30%, and the free cash flow is 8%. Also, it's very important to see the free cash flow to the expectation at least to be in a racing mode. And this parameter FFO here is lower than the first stock. Here is 15, so it's also telling us that this stock is cheaper. And the dividends, the dividend yield is 4.2%, and the company continued to grow its dividend by 1%, not so high of course, but anyway, it's a good sign that the company even show grow in its dividends. So it was the second stock for the monthly payments. If you would like to receive a monthly dividends stake, it can be a nice option for you. And the last stock for today, it's LTC Properties. So it's the most highly yield dividend highly yield dividend rate for today. It's more than 6%. The chart telling us that yeah, we are trading last years in a range, and its range is 25%. It's high, so for me it's relatively boring stock, but anyway, of course, for us it can be a good chance, because here we can see the dividends is really monthly. It's more than 6%. So now the treasury bond, let me check, treasury yield bond 2 years is 3.4% here, and here we can receive a 6% and we can have a monthly cash flow. So it's I think it's very convenient. And by the way, have a look on here on the their side. The momentum indicator on the weekly basis is 45, so most probably the stock is now oversold, so it can be a good opportunity to maybe to buy it. And let's have a look, of course, on the fundamental parameters for this company. So the market cap is 1.5, so it's not such a big company, but the marginality is 42, net profit margin 40-50 and 35%. Yeah, so all these companies I have have a very high margin. The annual earnings, yeah, we can see that EPS 2.5, 1.5, so expected to be some kind of stable, and the revenue, yeah, expected to grow. For the last year, it's expected to be in the same level of 21, but then in 3 years from now, it's the analyst expecting the revenue to see double in this on its figure. And let's check the dividend yield. Yeah, we can see that here it's very stable, 4.8, 5.2, 5, and for the last year it was more than 6. So what we have generally stable dividends, stable payments, high marginality, and of course the dividend yield more than 6%. When we see more than 6%, of course it can be a nice opportunity to hold it. By the way, also the technical analysis telling us that now it could be also a good opportunity, at least to have a look on this stock. And a bonus from me, and last stock for today, let's have a look, AGNC REIT. So AGNC, it's real estate investment trust. Its dividend yield is more than 12%. So it means that each month you can receive a dividend yield is more than 1%. It looks very nice, but in my mind this stock is the most dangerous. It's very dangerous because its financial stability is not so high. Let's have a look here, the fundamental parameters. So dividend year is really more than 12%, market cap about 6 billion. But here please have a look on the marginality. It's the marginality is going worse and worse. Now the company is not profitable yet. It's last quarters is showing losses. So it's very very dangerous, because anytime the company just can to cut the dividends or even stop to pay it. So be dangerous here with this stock. And the expectation, we can see also the EPS, earnings per share, are expected to fall, and the revenue also some kind of stable, but I think there is a high probability that maybe 1 year from now, 2 years, because all the problems with the recession, high the Fed interest rates hikes. Now the interest rate more than 4% by I think maybe in 1 month, few months from now, the interest rate, the Fed key rate will be about 5%. So of course it will be an issue for this company. It's already not profitable. So the performance and the parameters may become even worse for this company. So of course the stock is looking attractive. And by the way, the chart, it was in my correction. Look, the first one, the second, the third. Usually the third is the longest in the impulse zone correction, the fourth and the fifth. So here is most probably looks like it's finished. Yeah, now there is possibility to see an increasement. By the way, look, it was wave A, B and C. So that's what I'm forecasting for this stock. Yeah, and usually the bounce of wave B, it can be using the Fibonacci levels. It can be about 60 to 30% of all the correctional wave A. So in this case we can see a bounce to this level of wave B. Yes, so it can be the target here. But we are very close to this to the target, so it may be wave B, but then I'm expecting another crash for this stock. It will be the wave C. So A, B, C move. So it was my list of 4 stocks that pay you monthly dividends. If you like this video, press the like button, don't forget to subscribe, and see you on the next time. Bye.